today's a special one coming back, this time virtually. My personal financial planner, one of my mentors in financial industry and financial services, Mr. Joe, the legend Martinez, looking sharp as always, brother.
Always good to see you, brother. Always great to have conversations with you, man.
Oh man, dude, I don't know how you have more hair than I do. It's ridiculous.
I don't know, good genes, man. But you're losing weight. You're looking fantastic. You look like you're in shape. You're ready to knock people out.
Yeah, man. I was talking to my coach, and then he did something to me unintentionally. But Ben Anderson was on a call with me, and we were talking shop, and then he goes, "Sometimes you remind me of the fat guy on the treadmill. You're putting in the most effort, but you can't get your fucking diet right." And then I go, "Coach, I'm the fat guy on the treadmill."
Oh man, that's a pretty painting analogy right there. That's pretty cool.
Yeah, so I'm big on coaching and mentorship. So, I've worked out hard for, gosh, 20 years. I was 330 at one point, still working out every day. And Steph Curry has a breathing coach. He literally hired a breathing coach to teach him how to breathe while he's taking a shot. That's how much he takes a dive into his like practice. So I said, what am I doing? I went and I sought the best nutrition coach and lifestyle coach. I said, I got my mortgage coach on lock. I know how to do mortgages. I know how to run that business. I know how to work out. Now I need the most important thing, which is my diet. And so I ran out. I got a diet coach. They set me up on something called macros, which I'm learning about. And here we go. So I'm a few weeks
at
in.
this level for you, it's incremental growth, right? It's when someone is just way off, they have substantial growth. But for you, it's inches now, right? And how do we get to that next level? And you're doing the right way, which is you're bringing in just like Steph Curry, right? That's what's going to separate him. And it's very little incremental growth. So that's awesome, brother. Congratulations on that, man.
Thanks, bro. When I think about I'm one of the lucky ones I can afford to like go get coaches and stuff and really reach out to people and then even like reaching out to you to say, hey, how do I structure and protect my family's livelihood? How do I protect Victoria, my daughter, from me passing and her having to go to probate? And so you were instrumental. Can you talk a little bit about like you being a coach in the financial sector for clients and like what your ideal client looks like? I think with the current state of the economy, I want to highlight 2 points. The first is that most people don't think, not only can they not afford a financial planner or somebody who's in financial services to coach them, because it's not so much that they think it's too expensive, but they think that they're not worthy because they might not have the net worth that's required for it.
Yeah.
So an example could be like I went to this guy at Edward Jones, and he goes, "Hey man, my minimum is 7 figures." Yeah. And I was like, dude, that's see you in a couple of years, brother. Yeah. Or you want me to sell my house? If I sell all my houses, maybe I'll get there. So I want to talk about that a little, and then just really like what that kind of that sector that you're in, like how it's been able to really promote financial freedom and give a little bit more of a mindset shift to the individuals that you are helping. As you saw, you can tie it in as far as like how you're able to help people get started with solidifying their financial picture all the way through the process of getting financial freedom.
Yeah, I think, the average person would be anybody that has kids, anybody that has employment and houses. I think that sometimes we overlook that middle American market. And like you said, a lot of these financial institutions just want to deal with the wealthy and the affluent, right? And they want a million above. So 7 is actually low. They want a million and above. And so they're not willing to cater. They're not willing to tailor to somebody who's middle American and doesn't have that. And so I think that that's important because that's where the next generation of kids come in. If we start teaching and empowering those individuals, they start to pass it down and we have a brighter future, right? And, I always tell people, if you're already affluent, you're already doing things right? It's a whole different ballgame at that point. It's just trying to do things a little bit different. And so I think that when we sit down with our clients, we really teach them, protect from state probate, right? Start making sure that you have tax-free money saved, not just pre-tax dollars. You start to eliminate some risks, some of those fees, and just teach them the right principles and going on. It's something that it's fulfilling and you totally love in our industry. What was your second part question to that, Tony?
It was really like taking them through that journey of like when they start in and really start to change their financial picture. So let's just go with like you meet an individual that's referred to you by whoever it may be. They were looking for a trust or something that's a little bit easier to accommodate. That's another thing I think that's a misconception in the marketplace. A trust is for everybody, not just the rich.
Yeah, and it was unaffordable before because attorneys would actually be doing them one by one. But with technology, artificial intelligence, it's changed the game. And so now it's affordable where most people before never thought they could afford it. So you're absolutely right. It's for everybody who has kids and has a house.
So when you look at a individual, like how to identify like your ideal client, and then like who are you willing to work with? Like is there a person that you just like they're just way out of whack, I'm not willing to do it, or is there a specific type of individual that you are willing to take, right? Like we talked about the big firms wanting that's that person who has $1 million in assets.
Yeah.
Right? What is it more for you as far as like who you're willing to accommodate and who you're willing to help get through the process? And then how do you take them from like their current position all the way to, the next level?
Yeah, when I get referred somebody, the first thing I take a look at is see what they have, right, Tony, and what's in place already through their previous financial advisor or just them trying to figure out themselves. And then asking them questions like, what's the end result? Like you living on 100% of your income now, how much of that do you want at the end of the day when you're ready to retire? And based on the conversations, and I'm asking what's the end result, then I'm looking and saying, hey, is what you have already congruent and going to get you there? Right? And if it's not, then why are you there? Right? Why are you all in pre-tax dollars when, yeah, you're going to have $8,000 coming in, but Uncle Sam's going to be taking state and federal tax because it's earned income? Is that what you intend to net a lot less than 100% of your income? And is it because no one taught you, or is it because that's what your advisor put you on and that's his plan and not your plan? So that's the first thing that I'm thinking is I'm always looking at the end result. What does the client want? What are you trying to achieve? How are you trying to pass this on to the kids? Do you want it to be taxable to the kids, or do you want it to be tax-free to the kids? And what's going to happen with the properties? Is it something that you want to sell it and just retire it on your cash flow and go around the world? Or do you really want to leave a legacy and pass those houses generational? So I think for me, Tony, when we do our planning around clients, it's just what's the end result and asking those questions, which a lot of the advisors don't ask that.
Yeah, I love that. So you're reverse engineering their plan.
Yeah, reverse engineering. Absolutely. And is it congruent? Right.
Do you ever feel uncomfortable talking about death with the client? Right? Because that's really what you're doing. You're saying, hey, when you pass, when you retire, when you can't take care of yourself, that's a little bit of a dark subject. Like, how do you I feel anxious when I talk to people about that.
Yeah, you're right. It's something that a lot of individuals are not comfortable, but I think I put it with my stories and what I've experienced with my family. And I think that kind of puts attention down a little bit when you really talk about stories and what has happened versus just talking directly about what can happen to them. And so I think that puts them at ease. We tend to learn from other people's mistakes, right? And what has occurred. So I think when you're talking to them in regards to that way, it puts them at ease.
I love that. Do any of your clients ever like become licensed, like they see what you do for them? Does that usually lead to them saying, hey, you know what, I want to do that too?
Absolutely. And what's even more fulfilling is, unfortunately, when your client passes away, if you did an amazing job for them, the next generation, which are the kids, they'll call you over and they'll say, hey, listen, I want to put everything in place like you did with my mom and dad. You set up the trust, you set up, make sure that things were tax-free, you make sure that there wasn't a ton of risk. I want to do the exact same thing. And so that probably is the most fulfilling thing, is when I'm now working with the next kids and they're saying, hey, you helped my mom and dad, you were there, they trusted you. Can you just do the same for me and my kids?
Yeah, I'm writing that down as a sales pitch right now.
There you go.
My goal is to serve you so well.
That's your best testimonial, man. That's an amazing feeling.
Your kids call me at your funeral. That's powerful. That's a great, I don't want to say it's a great line because it might devalue it, but to say to somebody, my goal is to serve you so well that your kids call me at your funeral. That's
Yeah.
powerful.
And talking about the funeral, I'm going to be honest, while everybody else is bringing flowers and everybody's grieving, you tend to be the one good news, right? To them when you're actually going there because they give you that great hug and they're like, thank you so much. We appreciate you, what you've done for us. Right. And knowing that a check's on its way, right? Or the house is protected, or they apply for Medi-Cal, but it's under a trust now, and things are going to go the opposite way. So it's a great feeling, Tony.
I love that. How do people get into financial services? Like, if you had to say the first three things you have to do if you want to become a financial services agent.
Number one, you got to be open and willing to change, right? Like that's the first thing. And so I used to do loans. I used to be in law enforcement back, and you got to be willing to want to grow and learn. And that's the first thing. And then the second thing is there's state credentials, and then there's federal credentials that you got to do. And there's courses for that. But the great thing is this, like you mentioned Edward Jones, there are a lot of companies out there, they want you to go full time. They want you to leave your full-time job. And a lot of people aren't willing to do that. Some are, but some aren't. And so the nice thing about the financial service industry is it's the best kept secret out there. You can start part-time, it's a simple state license, and you can help out individuals unbelievable. And versus unlike like real estate and loans, when I used to do loans, it's a transactional business. So the minute I close escrow, I got to go hunt again. I got to go out there and look for another client. Same thing when it comes to any other business. But here, what I like about it is once you start to help individuals, you get to start getting paid for past performance of helping them out. Because in the insurance industry and the financial service industry, every year that the client continues, if you grow their money in the mutual fund base, let's just say, you're going to continue to get paid. In the insurance, you're going to continue to get residuals, right? And renewals. And so it's one of the best kept secrets out there. And not a lot of people understand how great financial services and the insurance industry is.
Yeah, I think right now, like, what's your take on the economy, right? Like, so here's an interesting thing, because like I'm in it, right? So like for me, I've been in a recession for 2 years now because in April 2001, rates started climbing. I saw it. I negotiated a bonus. I was like, y'all's not seeing what I'm seeing. But I went to the mortgage company and I said, hey, this is going to crash, and we retooled. So now for over 2 years now, the mortgage industry has been in a recession. Real estate probably has been in a recession for a year and a half. So we feel it, right? And then there's a thing that's told to us in mortgage, which is you feel it first, but you're also the first one out of it. Because what they do to get us out of a recession is they lower rates, right? Now rates are going up, and potentially there's going to be another rate hike in September. I would note there's a conspiracy that the feds, before Jerome Powell does that, are going to try to launch another COVID mandate, and I'm betting on it. Do you know why? You're smiling. Do you know why?
No, tell me why.
The head of the TSA just came out and said that in a big meeting, they told them that they need to start preparing because all the airports are going to mandate masks again.
Okay. I mean, I don't think people are going to stand for that, to be honest with you. I don't think that they're not going to grab the second round.
I'm open to it right now because we need more escrows. No, I'm just kidding. No, we're not. I'm ordering my lion not sheep shirt, and I think that and I don't want to get off topic, but I think that now we're fighting back. And I was talking to a couple of guys, and I said, we've been on the sidelines too long. The reason why is we're too strong. We're men. You're a man, like hands down. You're a great dad. You're in law enforcement. You can kick ass. You're financially stable. You love your wife. You're well dressed. You're well spoken. You, Joe, by every aspect of life, you are a man, which means when someone says something stupid, you're like, what? It doesn't bother you.
Right.
And that's most of us, right? Like we don't care. But we're now hitting a point where it's like we're coming after our kids. Now you're starting to get to a point where we got to stand up, because now you're bullying the people that don't have a voice and want to have a voice that are on our side. Now we're going to rise up, and it's not going to be the same. But I digress. Going back to the interest rate topic, we feel this recession. I was talking to this guy on the phone, and he was applying for a mortgage, and he's a W-2 employee. He's making $40 an hour, and he goes, yeah, the economy must be doing really great. Like, everybody's raising rates, but there's a bunch of jobs out there, and like the economy must be very stable. It was the first time I've heard that in a long time, and I was thinking to myself, maybe I'm just wrong in my perspective. Maybe it's just because I'm in an industry where the Fed's decision have impacted my livelihood, but maybe for the common person, it has not. I mean, the stock market's still performing. So, like for you, who's in the financial services, like where do you feel the state of the economy is? Where do you feel it's going? And like, do you see any adjustments here in the near future?
Yeah, I mean, it's interesting. Obviously, the interest rates have gone up, and in your world, that kind of slows down everything. And I think housing has gotten unaffordable because interest rates have been manipulated so low for such a long time, right? Coming out of the last real estate recession, and so therefore, obviously, now the pinch is being felt. But I feel like we're at a fragile point right now because there's people who haven't paid their mortgages, haven't paid rent, right? And we had this moratorium in LA where they didn't have to pay, and then you have commercial loans that are coming up, and so there's a lot of
Loans.
loans, and there's a lot of instability. We just manipulated the economy by printing out paper, and obviously PPE and stimulus, which is why we're trying to constrict the economy now. But we're super fragile. I mean, any little thing can turn it and go the opposite way. Whether it's going to war, whether it's having to tighten up the economy, and so we're fragile at this point. And so I'm with you. It's not as stable as everybody thinks. It's just been manipulated, and we've been getting away with it for so long. But it's a point in time where we got to pay up our bills, right?
Yeah.
There has to come a point in time, and we're just seeing this where it's constricting now, especially in your industry, because it's just unaffordable. And in my days, I was used to 6% mortgages. That was like the normal back then. And then we've had this 2%, 3% for a long time because we were trying to get out of the last recession. And so I'm with you. We've had a 9-year, 10-year, going on a 10-year bull run here, and it's about due. All right,
Yeah.
we gotta have correction, no doubt about it.
Yeah. When you see Michael Burry shorting the stock market, what do you think about that?
That's a huge indicator, right? That's huge, man. I mean, he obviously saw it way before everybody else on the other one, and people have been talking about it for, we're going almost on 3 years. What he just did, right? People have been talking about it, and so obviously he's looking at his markers and stuff. But I think that's a big indication. It put everybody on warning, on notice, real quick.
Yeah. Yeah. The 10-year bond market, the yield dropped today, which if it drops below 4%, I mean, I'm going to Sizzler because there's going to be a huge refi boom. But there's something you said briefly. You talked about you went into financial services, but you did mortgages because mortgages are transactional. I was watching a video, and before we upload it to YouTube, I'll try to get it in this during this clip.
Okay.
But it's a guy who's talking, and he goes, "Yeah, I left the military, and I had two options. I can go into mortgages, or I can go and do life insurance, go do financial services." And the mortgage guy told me, well, you got to hunt for your clients, and you got to qualify them. And after you qualify them, they got to get a house or they got to refinance. And then you get 30-day escrow, and then you get paid 2 weeks after that. He goes, and dude, and I went financial services side. I was selling, and within 2 weeks, I was getting paid. And then I was closing, and then I was getting paid right away. He goes, one side was W-2, one side was 1099. And when he put it like that, I was like, man, I wish I would have gone in financial services 8 years ago. I'd be so far ahead, So where do you see that, that break, and like as far as like the stability of having a career in financial services versus one of the other big three real estate mortgages?
Yeah, and I'm that guy too, because I went into loans, and my first passion is actually loans, refinances, and purchases, and that was my true passion when I was doing that. And then I came over to the financial services. One of the things that I realized on the loans in real estate is that I can't close business unless many hands are involved. Right. I have to have title. I have to have inspection. I got to make sure there's no liens. I got to make sure FICO score. I got to make sure that the loan rates don't expire. I have so many moving parts that everything has to go right, then close escrow, and then wait to get paid, like you just said a couple of weeks before, right after. Where on the financial side is literally you sit down with the client, you take an application, they say yes, you submit it. It's one underwriter, one person, their FICO scores, their health. They say yes or no. And you're getting paid advanced commissions in our industry. The minute you submit it, you're getting paid advanced commissions. You could say about half. And then when the policy actually funds in about 2-3 weeks, if not sooner, you're getting paid again. And so you're talking about getting paid every week. You can literally get paid every week. And 1099, meaning you got many more write-offs versus a W-2 that really has 4 big time write-offs. And so, yeah, you get to keep more money at the end of the day too as well. And here's the other reason. I've been through the financial service industry through a recession, through a pandemic. And here's what I found out. When interest rates are going up right now, on our end, it is kick-ass time because the clients are getting more rate of return on their savings programs and our interest rates are actually going up, right? And so it's a great time for us on that side. Now, during the recession, people are looking for something. They were spooked from the stock market, right? They're looking for guarantees. They're looking for something without fees. And so during a recession, we were doing extremely well too as well. And so what I've noticed is that it's pandemic and recession proof, and you're building your renewals for later on too as well, and you're getting advanced commissions up front. So that's the major difference on that, Tony.
Can you talk about what vehicles allow you to do that?
Yeah, you're talking about anything from insurance-based vehicles are going to allow you to be able to give guarantees and higher rate of returns to clients. The insurance banks are some of the top paying banks out there when it comes to the interest rates, and most people don't utilize it.
So, I think for the average consumer, when they just think of life insurance, they think life. Even me, up until I started working with you, I thought life insurance, you die, your family gets a paycheck. But now that we've learned there's tax-free investment vehicles through life insurance, one of which I personally have set up with you, where you're able to then invest post-tax and earn tax-free money. So can you give a little highlight of that? And then, that would be awesome. Just talk about that product and how it works and how people can leverage it.
Yeah, I think on your last show, I kind of said it's as simple as chocolate, strawberry, and vanilla, right? You got term, whole life, and universal.
That did well, that clip.
Did it? Okay. And so, if we're talking about, term obviously is a great product for someone who just wants to have the most coverage for inexpensive. But if you talk about the savings, one of the biggest IRS tax codes that allows us to really save tax-free money is your Roth IRA. And that's a big one. And most people don't have that, right? Or a Roth 401k through their employers. But also any savings on the life insurance, same thing. And you can supercharge it with more money than the maximum on a traditional Roth IRA. And so a lot of people don't understand that. And so that's where we come into the universal or the other one as well. So it's like I told you earlier, when I sit down with clients, what's the end result? Is the end result to have $500,000 and then Uncle Sam takes state and federal taxes? Or is the end result to have $500,000 and keep $500,000? Right. And so a lot of people are going to be like, well, I'll put it all on pre-tax dollars, or you know what, put it all on after tax. Well, it just depends. What does the client want? Where is he trying to go to? Is he going to be moving out of state? Right. And so life insurance can be used as a wealth tool, right? And asset preservation, because it also has living benefits today too, as well, whether it's a term, whole life, or universal. And so it's definitely a game changer.
Yeah, I love that. I definitely feel more protected since I set everything up. I drive a little bit faster on the freeway now because Victoria's protected.
And you drive fast already, brother. So Victoria, please slow down, Daddy.
Yeah. She goes, faster, Daddy, faster.
Oh, wow. Absolutely. Wow.
She's crazy, dude.
I'm glad she's set up. That's for sure.
Yeah. Before we go, brother, I want to just talk about, like, there's a lot of pushback, on TikTok, on Instagram, and I want to post a clip out for us that battles just basically battles back against why people should invest in an IUL versus term. And so I pose a question to you, and if you can do it within 30 seconds to a minute, but why is it that a client should invest into an IUL versus just saying, hey, let's invest into term and invest the rest?
Yeah. I mean, real quick, look, term and investor rest is a great strategy, right? Roth, which is a Roth IRA getting a term. And the IUL is exactly that same concept, but it's going to take it to another level because number one, you can sock away a lot more money tax free, where a Roth IRA isn't going to allow you to do that. And so you can, if you're trying to sock away good money, that's the place where you're going to want to do it because you're not restricted through contributions. And secondly, is I want a long-term product that can take care of my long-term care so that I'm not having to go on the government's plan on Medi-Cal. And on a term, once my term is done, I can't qualify if I have medical challenges for another policy. And so I want to make sure that I've taken care of myself, especially with the living benefits today. It's just a game changer and it preserves my assets. Plus, there's also taxes, right? That I want to make sure that I leave in an IUL to pay off taxes that are going to be on pre-tax dollars for the future, where a term, if it expires, I can't do that. And so there's different strategies. Not one is better than the other, but it is definitely an awesome tool if you know how to leverage it. And that's the name of the game, right, Tony? Leverage.
Yeah, I love that. And I got one last one for you, brother. I was having a hard time explaining this to a set of clients. I said, as soon as we close, we're going to put your property in a trust so that we don't go into probate in case anything were to happen. And then they go, well, what's going to be the difference? Like, what happens if it goes into a trust versus if it goes into probate? And I went, great question. I'm going to find out for you. I'm going to find out exactly what the probate process is because I was just speaking a sales pitch, but I do believe in the product. So let me get more informed and I'll get back to you.
Yeah, it's definitely not a nice process. I'll tell you, once it goes into probate, that everything gets frozen between 9 months to a year, right? And they're going to take a look at what the market value of that property is. They're going to send someone to inventory the inside, see what it's worth. And then the kids or the heirs are going to have to they're going to have to hire an attorney, and he can charge 2 to 7% of the total value. And so, and they got to be battling. And not only that, the courts have to advertisement what is left when it comes to what's left and who can contest it. They have to advertise it. And so it's a nasty process. Prince's estate got tied up for several years. About almost 50 million of that went into attorney fees. And it's just not a good process, right? And so everybody who has kids under the age of 18 or has a property definitely needs to have a living trust.
Interesting. So then if they have a living trust, then there's the executor, and then the executor would just dictate ultimately, hey, this is what they wanted, and then this is what's going to happen.
And the best part about putting your house in a trust is the cost basis, right? That's the biggest thing. Like if I bought my house at 300,000 and it's worth, let's say 900,000, if I don't have it in a trust, my kids are going to have to pay those capital gains. But if I have it in a trust, my kids are going to inherit at the market value at the time that I die, and they don't have to pay those capital gains. It's the cost basis on the trust. That is huge when it comes to why they need to have it.
That's incredible. Well, I love that, brother. I love that.
Absolutely. So what we do for families is incredible. You know, it goes hand in hand. When I was doing loans, I said, hey, you know, I'm helping my clients qualify with 2 incomes into a house, right? But what happens if one of the incomes goes away? Now I'm leaving the wife with the house payment, right? Where they qualify with 2. They got 2 car payments. They got two types of credit cards. They got 2 student loans. They got now a mortgage payment, but you're taking away one income. So we got to protect that. We got to make sure that we protect that income that you qualify for. And then worst case scenario where both of you guys are together and both of you guys happen to suddenly pass away, we got to make sure that it stays within the family and it doesn't go to the government, right? And so those are just, it goes hand in hand. So that's why I fell in love with the financial services, because I was helping them with the loans and purchase and getting into their biggest assets. Now I said, we got to make sure we protect that income that got you there. And we also got to protect the house and make sure that it goes to the kids. And so it goes hand in hand.
I love that. And John, we can't wait to have you speaking here live in Marietta.
Absolutely. I can't wait till next Tuesday and talk about, you know, why I was in your industry and why I decided to make sure that I was able to help our clients in different ways. And it just goes hand in hand. your clients already love you, they trust you, and they want the best for their families. And so why not bring them the education and the knowledge? At the same time, make some passive income, start growing an agency for that, right? As well.
So we're speaking September 7th at 11 a.m. We have
At your
11.
office, and I can't wait.
So yeah, I can't wait, man. We're gonna clip this out. We'll put it out, and then we'll put a sign up on the bottom. So
Yeah. So if
September
you like
7th
what
in
we
Marin.
heard today, I'm sorry, if you like what we heard today, we're going to go into it a lot more over there. And so if you have questions, bring it. I'd love to meet you in person.
All right, awesome, brother. Well, hey, I appreciate you. I'm gonna